South Africa's consumer inflation slowed marginally in June in line with market expectations. Stats SA data shows that the annual consumer price inflation was at 5.1% in June, down from 5.2% in May. The main contributors to the annual inflation rate were housing and utilities, miscellaneous goods and services, as well as food and non-alcoholic beverages, including transport. For more on this, we are joined by FNB senior economist Koketso Mano. Koketso, thank you so much for your time. Having a look at this reading, did this align with your own forecasts within FNB?
So when we look at our own forecasts, we did expect inflation to remain flat at 5.2%. So it was a slight downside surprise. But as you can see, over the past 3 months, inflation or headline inflation has remained relatively stable. So I think that's the theme around the numbers that we received today, that relative stability continues in the month of June.
With that said, let's expand it, or rather unpack it a bit further. What aspects of this particular print are encouraging for you as you judge them against what is happening in the economic background for consumers?
Yes, so I think let's start with core inflation, right? So we did see in the month of June, Stats surveyed housing inflation. So that is actual rentals as well as owner's equivalent rent. And you can see that did provide some upward pressure on a month-on-month basis. But that said, you're still seeing on a year-on-year basis core inflation remaining relatively sideways. It eased from 4.6% in the month of May to 4.5% currently. So really around that target that the Reserve Bank is always speaking to. And it shows us that, demand pressures in this economy are not very strong. So underlying inflation here is really stable. So we are seeing that as a positive, number one. Number two is that when you look at the fuel inflation dynamics, you will see that we experience fuel deflation on a month-on-month basis. So fuel prices did fall in the month of June. That is a combination of really stable oil prices despite reflection of really a recovery in the rand. So that will be something that's really positive also from an inflation imported inflation point of view. So that is something that we also take cue as something that is positive. Last thing here that I want to mention is food and non-alcoholic beverages. Right. So over the 2022-2023 period, we had really strong inflation when looking at food as well as fuel. So we're seeing that starting to come off. So when you look at the broader goods inflation dynamic, that is showing us that we're moving in the right direction. We're starting to experience really a slowing in that on that front. So food inflation in particular did slow to 4.6% from 4.7% previously. But when you look at the month-on-month pressures, you are seeing that there is unfortunately a lift in those numbers. We saw 0.5% driven by cereals and bread and cereals. We saw non-alcoholic beverages. We also saw a lift in dairy and milk and dairy and eggs. Pardon me, I'm losing my mind here. But yes, so all of these do show us that unfortunately there is that uplift in food inflation on a month-on-month basis, but on a year-on-year basis we are still continuing to see it come off.
Some economists expect inflation to remain sticky at around 5% until the end of the third quarter, and then from the fourth quarter to start ticking down slightly below 5% going into the fourth quarter. Is that how you're seeing it?
Exactly. It's a reflection of forecasts across the board. So in the fourth quarter, particularly the second half of this year, we could see really inflation starting to fall below that 4.5% mark. It will be temporary, though, in our view. So it will be some months in the second half that are reflective of that, below target inflation outcomes. especially in the fourth quarter. It is a feature of, the rand continuing to improve. We have said this in our communication that we see the rand falling towards a fair value level of 17.5 against the dollar. So that would be something that really supports headline inflation slowing. But as is tradition, in the first quarter of each year, we get these infrequent surveys, whether it be education, medical insurance, that tend to drive inflation higher. So we think that this below target, these below target expectations on headline inflation will probably be a bit temporary. And also on top of that, we are thinking that food inflation is probably going to be a bit more problematic in the second half of this year. If you think about some of these adverse weather conditions that have been spoken about, flooding, freezing conditions in the northern parts of the country will have implications for fresh produce. So we still have to see exactly how that affects food inflation, as well as the deceleration that we have been experiencing so far. Broadly speaking, adverse weather conditions are a concern across the globe. You will see soft commodity prices have risen. You will also see stats to say flagging that, when you think about hot beverages, coffee, tea, all of those are very high compared to when compared to last year. So about 30%, for example, when thinking about some of those hot beverages. So those price pressures are unfortunately still with us, and it could also slow some of that downside pressure on inflation perspective.
Koketso, as we wrap up, how many rate cuts are you expecting from the Reserve Bank? Is it 1 or 2 for this year?
So we are only seeing one coming through in November. We are a bit more hawkish relative to the rest of the market. I do realize that the market is starting to price in a bit more cuts, and that obviously follows the MPC cutting or reducing rather the inflation forecast at the previous meeting. They are also showing that they're moving towards a more or having a more dovish tilt, if I can put it that way, with 2 members already voting for a cut. So we are moving in that direction, but we think the MPC has flagged quite, with emphasis, some of these upside risks, and we think that they will be cautious in how they implement the cutting cycle.
Koketso, thank you so much for your time this afternoon. That is Koketso Mano, who is a senior economist at FNB.